Hi everyone, welcome to Finfluence 2021. We're about to bring you everything that you need to know as a new age investor. It's all going to be about new age investing. And before we get into all of that, congratulations to Grip. Grip's hit a fantastic milestone of facilitating 100 crore INR worth of asset-backed investments. And well done, guys. It's only like been what, 15 months? It's crazy. Congratulations.
Thank you so much. Thank you. And thanks to everyone for joining, the panelists, for you guys to host it, as well as the users who have taken time out to join us. Thanks so much.
Glad to be here on this panel. It's a pleasure.
Great. So let me begin by introducing our panelists. First, we have Ekmeet from Lendbox. Welcome, Ekmeet.
Hi,
Ekmeet has an MBA in entrepreneurship from IE Business School. He spent time in venture investments and development. Ekmeet started his journey as an entrepreneur with Lendbox, which is one of India's leading peer-to-peer lending platform. Up next, we have Avishek Das from KredX. Hi, Avishek.
Hi, everyone.
Who has over 16 years of experience in the field of fintech and financial services, making us look a little incompetent in this space. But Avishek is presently heading investor relations and alliances for KredX, a leading cash flow solutions provider offering innovative solutions to enterprises and suppliers.
Adding to this fantastic panel and making us feel true to Ekdam is Mr. Sudarshan Lodha from Strata. Sudarshan, a successful lawyer, brings over 9 years of leadership experience in real estate and private equity law. He's represented private equity deals worth $1.4 billion. Yes, FinCocktail, small, bootstrapped. Come on, guys, one of you invest in us sometime. He's also co-founded Strata, a company that is trying to redefine real estate investments by making them accessible and at affordable prices. Last but not the least, we have our man Nikhil from Grip. I was told to do that. I am very excited. So Nikhil has a degree in economics and an MBA in finance. He spent 6 years as a part of the investment banking team at Morgan Stanley. And then finally went on to co-founding a mobility startup called Chalo. Currently, he's the CEO of Grip, and they try to help facilitate wealth creation opportunities with a healthy, diversified portfolio. Nikhil also serves as a consultant because this wasn't enough for him. So he also serves as a consultant to the World Bank on public transport policy. So our panelists are all here and we're very excited. So let's just get into it.
Yes, absolutely. So Nikhil, I'm going to put you on the spot first. So for the new age investor who's basically looking for opportunities other than mutual fund and FDs and other vanilla options, what do new age investments actually mean? Can you explain what they mean?
Sure. I think it's sort of an ambiguous answer. Most people think of investments to be only the two things that you're talking about, right?
Yeah.
And the predominant reason is that the ticket size for investment has limited people from exploring new products or new avenues. If you look at the panel today, none of us are. It's not like you've created something out of the blue or out of the thin air. These are all products that have existed for centuries. Leasing, for example, was one of the earliest forms of providing capital and business growth for companies. The reason we call them new age is because as a factor of technology and because of the way they're being provided to users, especially a new type of users, they're becoming available. P2P lending, companies like what Ekmeet is doing, invoice discounting, what Avishek is doing, fractional ownership of commercial real estate, inventory financing and lease financing, which Grip is doing, I think are some of those examples for the new age products that we're seeing today. I am sure that there will be more in the future and some of us will innovate in that space, but we are at the tip of that diversification and adding new investment options for individual investors.
I was just about to say tip of the iceberg, right? There's so much to explore.
Just to add on to what Nikhil mentioned, guys, sorry to interrupt here. What all four of us are trying to do in our own respective ways is we pick up an asset, we pick up a quality asset, we break that down into smaller fractions, and then take it out to retail audience, which previously would not have been able to access that, majorly because of the capital intensive nature of such kind of assets, or maybe the kind of time commitment that people need to invest into in order to gain a certain value out of such assets. And essentially what all three of us, all four of us in fact, are trying to do is doing something similar, but the asset that underlies all four platforms is different. I am more than 100% sure that there is a huge overlap in the kind of investors that all of us focus on. But yes, essentially it is providing different kind of asset with different kind of quality to each of our investors. And I think what Nikhil rightly mentioned, that these new age investment options are nothing new. They are these same principles have been applied in the offline world. A lot of seasoned investors are doing this, have been doing this. Our uncles, our parents have been doing this in the offline world. More so in a more unorganized manner, but what all of us have been able to successfully do is create an organized sector around it and take it to a level that even somebody with as small as 50,000 rupees of investment surplus can also invest into asset like these.
Wow.
Sorry, Sudarshan, not talking on your behalf where the
It's all, I think it's all about being accessible to the retail investor. You're trying to get that, get these investment opportunities out there. So let me come to Avishek. He's been a little quiet over here. So I'm going to ask him the next question. What do you think are some reasons that are driving these investors to seek out these new age investment options, like those offered by all you guys?
All companies.
Just to begin with, just to add to, in fact, what Nikhil and Ekmeet mentioned, there had been asset classes which has been present for long enough, but it was always restricted either to the FI, the financial institutions, or the unorganized part of the sector. Those have become very accessible to people, to investors, and that too at an affordable amount, affordable quantum. Right. That being one. So you are introduced to a lot many more asset classes, a lot many more instruments where you can invest to grow your money. That's being one. Geography is no more a foundation.
Absolutely.
You can invest anywhere, sitting anywhere.
Absolutely.
Ease of use and access. This is like has become kind of a mandatory thing in today's life.
Yeah, absolutely.
And also, by virtue of these, automatically you are diversifying your asset, your investments. So an asset diversification is already happening.
Correct.
So I feel these few points have been fundamentally very important for anybody who is looking at investment in any of the new age platforms.
Got it.
Great. Interesting.
If I can just add a very small point. We ran a survey of our users recently to identify what is it that attracts them to Grip, and maybe it's important to your question. We assume that the rate of return is likely to be the most important criteria, but it's actually what Avishek said. It's actually diversification. Okay, investors are looking to diversify not just from fixed deposits and mutual funds to assets like this, but even within the assets. Avishek's platform offers multiple invoice discounting platform opportunities, and they will play across those. Similarly, Grip will offer multiple in leasing opportunities, etc., right? And I think that's actually been the standout feature for one of the popularity for these platforms.
Right.
Got it.
Interesting. So this brings me to my next question. I feel like liquidity has a very kind of strong role to play in these new age investments. But like liquidity might be a short-term phenomena because, once it reduces and the interest rates sort of increase, do you really think people will be interested in these new age investment options then? Maybe Nikhil or Sudarshan, one of you all can take this.
Nikhil, maybe I can just start off. I mean, obviously we are in a bull run, right? In terms of all assets. When fall comes, some get burned, some are smart enough to exit out very early, but I believe many will stick around having grown wiser. I mean, you need to fall to learn, right? I think in one of your things also, invest, learn early. For new age investors, as you mentioned, right? Today, if you invest, it's a more cheaper way of learning rather than at a later stage when you're deploying a larger capital and you burn your fingers. It's always advisable to start early because your opportunity loss is lower, right? But I think the demand for alternative assets goes just beyond. There's a need for people wanting to invest in something better, something different, right? But let me just speak from a very market oriented standpoint, right? I think markets are at a high right now. Post-tax debt returns are at all-time low. I mean, if you're investing in FDs or liquid funds, you're losing money, right? Looking at whatever is happening today in the market. But if you've invested in equities through the pandemic, obviously you're smiling because you're obviously on a massive gain. But question then comes is what next, right? If you need to book profits, where to invest that money, right? So I think personal finance is becoming harder day by day, and it needs a lot more thinking to preserve the value of their own money, right? So platforms like ours, again, bringing the point what Nikhil, Avishek mentioned, diversification becomes a very, very, very important aspect which people want to do, because now once they make money, then preservation of capital becomes one of the core criteria, right? Absolutely. Apart from making monies, etc. So we believe there's a growing trend to explore more alternative ideas for personal investment. And what happened with mutual funds 25 years back, I think fintech platforms like ours or wealth tech platforms like ours, we are at that advent to make that new decade for alternative investments in a larger way. And I think intersection of investment, expertise with technology is making accessible these opportunities accessible to individuals. I think is perhaps the next biggest opportunity which India would see in the coming decade as such. And I think Nikhil and I have interacted in the past that we perhaps are sitting on the biggest gold rush moment to what California had when the gold mining industry was formed, to what we feel this can happen for alternative investment through technology in a larger way.
Interesting.
Fully agreed, and this has definitely been a watershed here. None of us would have seen the kind of growth on our platforms, and not just in India, but even globally, had it not been for what's happened in the last 12 to 15 months from a liquidity perspective.
Absolutely.
But so is true for online adoption of e-commerce, food delivery, and everything else, right? Including the Zoom platform. All of this year has changed how we behave in a lot of respects. Investments is just one of those. There is a basic need and premise that is being addressed, and that will continue far beyond interest rate cycles, market curves, because ultimately all of our platforms in some ways are providing non-market linked returns, right? They're not linked to what happens on the market, and hence become an interesting opportunity, especially from diversification.
Diversification, correct.
Also, just to add to what Sudarshan and Nikhil said, it is also about the awareness and the education that is being passed on to the investors. If I as an investor, I'm not even aware of what, say, a grip is doing or what a strata is doing, I wouldn't even think of it. I will still stick to mutual funds.
Just don't know.
So with the spread of knowledge and the transparency and how it works, if these things are explained to people, that is how the shift is happening. More and more people are coming to the new age platforms for investments.
No, I'd just like to add one more point, you guys. I mean, what you guys do at FinCocktail is simple, right? I mean,
I was just about to say that. I was like, thanks to people like us. I'm just going to take some
but end of the day, what Avishek, what Ekmeet, what Nikhil, what I are doing, as much as we are a wealth management platform providing different asset classes, but prima facie, we are an edtech company. We're educating investors about an asset class and the positive impacts of what this is. So I think till our platforms, I think Avishek might not be the right thing, because it's a very evolved platform and they've spent enough time educating investors what this is, with obviously their track record in the past. But what we are trying to do is we are educating. I think probably for the next 2 years we'll still be educating investors that for us, at least I can speak, and probably even Nikhil can speak from his stand. Like for us, when we went out starting selling real estate online, right? Imagine, I never in my life could imagine my grandmom using Ola and booking and going out, right? So we brought about, so what Ola did over the years was educated investors and brought in a huge customer behavioral change. That's what both of us, I mean, probably even Ekmeet, etc., are doing by bringing that change right now. Customer that up online kharid sakte ho. You might be enjoying your holiday in Bahamas, for that matter. Just click of a button and you can buy, right? So what Zerodhas of the world did for stock market to an online platform, gold is bought online, real estate is bought. I mean, mutual funds are bought online, stocks are bought online. Why not asset-backed securities? Why not real estate? Why not invoice discounting? Why not P2P? Right? Phenomenal opportunities. Making people access through technology is the game story.
Absolutely.
Just to add on to just one more small point, I think highlighted a very, very key point here, that all of us are educating the investors in one way or the other. And see, investment is a very, very personal choice. See, we interact with a lot of investors, and believe me, they listen to everyone, but they do what their heart says. I mean, so at the end of the day, everyone has their own investment strategy. Everyone has their own winning strategy, right? And when you talk about current markets having a lot of liquidity, a lot of disposable capital with investors, this is the perfect time for platform like ours, non-market linked investment options, for people to try out. I mean, and there is hardly any barrier to entry on all such platforms.
Sure.
And once you're part of somebody's investments winning strategy, I mean, that is when we at Lendbox, and I'm sure all other platforms also believe that when you're part of that winning strategy of an investor, the investor is going to stick around for long.
Yeah,
absolutely.
You might not make money on the first transaction, but you know that over time he's going to come back to you, put in more funds. He's going to refer a lot of his friends, family, and that is what is actually will create value for investors. More and more people try this out. I mean, if you have more liquidity, there will be more people who will try this out as an asset class. The pie is going to increase. And I'm sure all of us agree that the hardest sale for all of us here is the first investment. I mean, once somebody has done that on the platform, I mean, then it is about the quality of asset that you present to him. It is all about the experience, the convenience, the accessibility that you're giving to him. And he will come back to you with follow-on investments. I think, which is where most of our time goes, and I'm sure Nikhil, Sudarshan, Avishek, all of them also spend a lot of time on ensuring that that is being made possible to the investors.
Got it. I think I completely agree that the pie is also increasing, and just investor education is so important.
And accessibility.
Great.
I mean.
But as financial influencers, now I'm going to bring in a little bit of learning that I've had in my short tenure of being an influencer. We get this question asked a lot. Okay, I'm sure you guys have faced this, but paisa banana hai, risk nahi lena boss, risk free chahiye ekdam total. Okay, but minimum 15% return. I don't know where they get this idea, but they have this thing. Okay, so I'm steering clear from like any percentages, etc. But the Indian mentality of being risk averse always sort of creeps in. So I guess I want to pose this question to Ekmeet again and Sudarshan. How should investors think about risk and risk mitigation?
So I'll tell you how the journey went for us. I mean, we'll complete about 6 years in November 2021. I mean, when we started off, we were only offering high risk, medium risk, high risk investment options. There were a lot of people making a lot of returns, but there were some who were losing money also. There was an unpleasant experience for those who were losing money on the platform. I mean, they will strictly go against the entire industry, etc., letting aside just the platform. But around 2018-19, when DHFL crisis happened, I mean, we started getting a lot of opportunities which were initially going to larger financial institutions such as IFL, etc. And we got an opportunity to start building proposition around medium risk and low risk offerings. And you will be surprised that a rupee that a person gives in a high risk investment, the same person is willing to give 10 rupees for a low risk to a very low risk.
Exactly. This
Right.
mentality is always there.
So, which is what we understood, right? That is the need of the Indian investor mindset, and we have to create a portfolio which will not just cater to a high risk, high risk category user, but also give options for him to diversify into various asset classes that will come with different level of risk. Now we currently we've got the retail debt portfolio that ranges from very low risk category that yields about 9.5% to something which is very high, which can gain up to 36% per annum. But yes, mitigants are available. Risk mitigation. It is first thing is understanding of risk. I think the first and primemost criteria which all of us are doing here, I mean, is making the investor aware about what kind of risks are there in the transaction, and how people perceive risk. I mean, it is a very subjective matter. Risk, we can go on and on about risk and how we are mitigating risk and how other platforms are mitigating risk. But at the end of the day, the only thing is proper understanding of risk. I mean, at the end of the day, investors understand that the returns that he's going to yield, the yield he's going to make is the risk-adjusted returns that he will be gaining.
Yeah.
At the end of the
Right.
day. And it is very important to make him aware that yes, if you put into this, I mean, there is a high likelihood of him losing the entire capital also. That being said, I mean, the background of people, their demographic, I mean, what kind of age they are in currently. I mean, people at particularly retirement age usually don't invest into riskier assets.
Right.
People early on, the people who are trying out first-time investors. When you talk about new age investments, you're essentially talking about a lot of first-time investors. They are ready to try cryptocurrency. They are ready to try assets which are slightly riskier in nature. Yes, obviously the product has to be tailored as per the risk expectation of the investors, and that's what we do. And I'm sure other platforms are also doing that efficiently.
I mean, I'll just add on to what Ekmeet mentioned. Right? I think thumb rule is diversification, right, in business in itself. And I think, I've spoken to the best of best wealth managers and fund managers in India, and they said, agar aap double digit mein kama sakte ho, from an overall portfolio standpoint, you already beaten 99% of all the fund managers in India.
Absolutely. Absolutely.
So hands down, that is simple, important, but diversification is the thumb rule which you need to focus on, right? So one thing, and rightly pointed out by both of you, right? Like today, we did I spoke to Nikhil also about it. Like in India today, there's a Carvey Wealth report also which speaks, right? Like we have 5 trillion wealth today in India. You're not a 5 trillion economy, but you're 5 trillion wealth. where 26% of that money is parked into metals, right? Whether it's gold, diamond, silver, etc. 23% is in fixed deposits, which is absurd. From an investment standpoint, that shows clearly how bad as a nation we are with respect to wealth management. Then comes 21% into real estate, which is not your own house, but if you bought another house beyond your house, which is a dead investment.
Yeah.
And then comes stock, mutual fund, and alternative investment in the entire grand scheme of things is 1%. Right? So clearly you see Indians' mindset of ours, like even you said, पैसा safe चाहिए but returns ज़्यादा चाहिए.
Exactly.
Concept चलता नहीं है, right? और वो concept अगर चलता है means if someone says मैं पैसा double करने वाला scheme means you're going to lose your money, right? As simple as that.
Oh, this Akshay Kumar has said this 20
every seasoned investor knows that if you're talking about anything upwards of 14-15%, there is a huge amount of risk that is.
Yeah.
I mean, there is only a naive investor who would say that yes, I am going to get risk-free 14-15%.
So yeah, right. So we tell our investors also, we educate that please diversify across stock, bonds, etc. But stop making fixed deposits or make those allocations, right? So as a part of allocation, also we advise people that at least with us, if you're investing, if you have a less than 5-year mindset, don't invest, right? Because real estate takes time for it to mature. You're not investing for an 8-9% rental return. You're investing for the appreciation so that you hit that double digit. What we are targeting from a business standpoint as well. So long term is something which we do. So as like what Ekmeet mentioned, 2 prima facies, if you're young, have more of your allocation towards equities, etc., less to debt. And as you keep growing more, you should invest more. And like I even mentioned earlier, if you're young, invest early. Your mistakes are going to be cheaper than mistakes at 40 and above when you're making a lot more money, right? So allocation is more important as a risk mitigation rather than anything else, and understanding each and everything, right? In the finer tunes of terms and conditions, even if you're investing 25 lakhs or even 25,000 for that matter, but understanding what you're getting into is very important. So I think one thing which India lacks royally is a good financial advisor.
Yeah,
That is true.
For that matter, right? They hear from multiple things, and I can assure you, most of the guys who are attending our webinars this time, are investing because their friends told कि ये stock खरीद लो.
Absolutely.
Friend is the worst financial advisor because even he's heard from some other friend.
Oh yeah.
Something else altogether, right? So having a good financial advisor is critical. At a grand scheme of things, even if you pay him a small fee, trust me, it's nothing in comparison to the kind of savings or losses which you can cut by getting a good financial advisor.
Yeah, very true. It's a great segue to our next question.
Yeah, actually, you literally like led up to my next question, Sudarshan, when you spoke about allocation, right? So a lot of us always keep thinking about what part of our portfolio actually should be allocated towards these new age investments. Now that's something that also comes across as an important thing in terms of diversification. So let's ask Avishek about allocation. What are your thoughts on this?
So when it comes to allocation, I would say there is no real thumb rule to it.
Mm-hmm.
It again, what we were discussing in the previous question, it is your perception of risk. If my perception, if I am a risk-taking person, then probably I could actually be investing 50% of my portfolio in one of the new age platforms,
sure,
which has riskier exposure, in the expectation of a higher return, and I'm perfectly okay with it. The point is that yes, I have read about it, I have understood the clauses about it, I have clearly understood the risk associated with that particular asset class, and then I have exposed 50% of myself to that particular class. That's fine. So what I'm trying to say is it is primarily to each his own. How you perceive risk, but overall, I would say a 10-20% allocation would not hurt.
Okay.
This is also a question that somebody posed.
Ravi Handa also asked a similar question.
I'm going to ask Nikhil the same question again. What are your thoughts about allocation?
Yeah, he said, what portion of one's liquid portfolio would you recommend for new age investments?
Yeah, I think what Avishek said is absolutely right. The only thing I would add is portfolio construction also goes in hand to hand with the risk level of the transaction, right? And as you think about new platforms such as ours, and there will be 10 or 15 more in the next 12 months or 15 months, apart from the product, I think it's also important that there is attention paid to the platform itself. Okay. A lot of times, and I do fear this will happen, is that the industry will often get a bad name because one platform does something, right? Or another, and that impacts all the platforms. But correct, just because it's the same product doesn't mean it's the same situation. I think there are interesting questions that both Rahul and Chintan have asked, and I'll try to cover this in that point. Look for products and platforms that are providing the transparency, right? I think that's absolutely critical in terms of the product you're offering, what the performance is, what the contract is, as well as trying to do as much as possible to mitigate the risk of that particular transaction. All our 4 platforms offer different products, and hence each of our risk mitigation will vary to a large extent. But I think understanding that aspect, understanding the transparency, and starting small, right, to get a full feel of what you're getting into, I think is what I would advise in addition to thinking about your individual portfolio construction.
Okay.
Just to add what Nikhil said, probably, I'm sorry.
Go ahead, Avishek. I will add on to that.
So I think give some time to observe a platform rather than just jumping into it. observe how it behaves. What is the pattern? What kind of range? What kind of names? What kind of companies? Everything is coming onto the platform, and then probably start slow.
I agree with Avishek. I think most of our investors start really small, and they usually peak in the third month of their engagement on the platform. I mean, I'm sure the same mindset that you talked about, I think, is happening on the back end with all the investors. They are there, they're observing, they're seeing a few cycles of repayments, and then only increasing exposure. But interestingly, we did a survey with a few thousand investors on our platform. And we asked that what is their asset allocation on the new age investments versus the traditional investments, and how well they are diversifying across the new age platforms that are there. And almost the statistics is in line with what these guys mentioned should be the portfolios. About 24 to 25% of the asset allocation by individual investors is being put across on new age platforms. Strata, KredX, Grip, all of them have been very prominent names in that survey. We try to understand that what are their most famous, favorite platforms in terms of particular kind of investments also, and these names came out very often in the survey. So as rightly mentioned, that yes, when it depends majorly on your risk appetite, but I'm telling about people who've been investing on our platform, and they are investing on various other platforms, and usually about a fourth of their portfolio goes into the online new age investments. And I think it's a very, very fair strategy. If I am also looking at building my own portfolio, probably this is a very, very fair allocation to new age new age investment options that are there. Probably when I turn 60, maybe it will be different, but at least most of our target audiences is young. I mean, the average age on all the platforms will be sub 40, I'm assuming, and which is where we see people taking newer bets in new platforms, new investment options.
Got it. So getting into a little bit of details and the other side of the coin. There's a perception that borrowers, counterparties on such platforms don't have great credit, which is why these platforms become the last resort of capital for them. Do you think this perception is correct, valid? Do you think it's changing? If it's not valid, why do you think borrowers don't approach a bank or a financial institution but come to these platforms? I didn't mention anybody who should answer that first. So I think I'm going to go to Sudarshan, because not heard from you.
Sudarshan, why don't you take the first shot?
Yeah, not heard from you for a while.
Great. So, I mean, there are 2-3 reasons, right? Accessibility is one, right? Like, for instance, let me just not related to Strata for that matter, but my dad has been into financing for 6-7 decades now. So we do car financing and land financing for that matter, right? And my dad, being a Marwadi, does financing at 24% for that matter, right? So why is someone taking from 24% from you when there are other platforms? I mean, banks who give it, right? But then point then comes, right? Bank with all the kind of documentation, etc., etc. And the entire experience in itself is so dismal to people that they are happy to pay something, get access to things faster, and then do it. And like, for instance, my dad, I can give you an example, like a vehicle which he was financing, which was 5 lakhs. He gave him a loan of 1 lakh. Now his cover is 4x, 5x on top of it, right? So it's a no-brainer, but still people come to such platforms. But what these platforms are trying to create is nothing, and what banks are trying to do is what this fintech is, right? What is neobank today is a similar concept, right? It's nothing, a great UI UX on a bank product. At the end of the day, it's a bank only which is doing the entire transaction.
Yeah.
As traditional with their approach, with rigid as a system they are, with the kind of bureaucracy to get things done, etc. I think platforms being nimble, being agile, gives that ability to focus only on one thing, right? So I remember in one of these conversations when Narayan Murthy brought out, right? Like they asked him, who's your competition, right? And is Wipro your competition, or Cognizant your competition, or TCS your biggest competitor? He says, my biggest competitor is this guy sitting in Koramangala on one product. So my banking software, he's breaking it down into smaller aspects and focuses only on one, and he's mastering that art, which eventually he'll grow big, right? Like BharatPe is one classic example on how from one aspect they're scaling up to what they are at the same time. So platforms like ours gives faster accessibility. The experience is fantastic. It's easier for them to approach to them, and multiple. And more importantly, I think getting access to these opportunities, like what Nikhil is doing today. Honestly, I don't know if anybody used to do this before. What Nikhil does, because if there were banks who were ready to do it, or lending institutions are doing, would not do less than 21-30% in terms of return. What Avishek is also trying to do is a similar thing, right? Like for institutions, giving them faster access to capital. The time value of money is what KredX is at the end of the day, right? Like come in faster, and end of the day they take care of all the security also at the same time, right? So that is the game changer in all angles.
Absolutely. I'm sorry, Sudarshan.
No. Please go ahead, Avishek.
So just absolutely what Sudarshan said. It is about, if we draw a chart, on one hand, we draw the MSMEs coming to a fintech platform, and these MSMEs going to a bank or FI. The kind of time taken for them to have access to that kind of capital. And these are MSMEs, these are growing organizations. They need it, like they needed it yesterday.
Yeah.
Not 10 days later.
Yeah.
That tact is the most important thing. Of course, you keep everything intact, you keep your due diligence, blah, 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 everything, obviously the right spot. But that tact becomes the most important thing. So when that tact comes in, MSME or a growing organization is absolutely willing to shell out that extra bit of bips to compensate. That's fine.
I can just add, because there may be one different use case for GRIP where we have seen is that there are certain categories of physical assets which the banks and NBFC have not yet got comfortable with from looking at, right? Because technology is evolving so quickly, and I think electric vehicles, for example, is a great case in point. There is still very limited traditional financing available for a sector that all of us are seeing in front of our eyes just expand, right? But yet the traditional sector is not available. And my sense is that whether it is by nature of product, by nature of business model, by the type of company, by the type of data required to be analyzed, there is always going to be a differentiator that nimble platforms using technology will be able to stay ahead of the curve.
Sure.
It may be electric vehicles for us today. A decade down the line, it may be something else, right? Whatever is frontier tech at that point of time. For Avishek today, it may be MSMEs. Tomorrow, it may be even smaller companies, because their ability to process data points will be far superior than anyone else. So I think that's the additional place or play for platforms like us, which obviously give investors higher returns and at a very different profile of risk.
Interesting. Very interesting. Great. So Darshan seems to be preempting a lot of questions for me. I think it's because you've been doing so many webinars. But I was coming to the part where, there are so many recent announcements from platforms like Cred and BharatPe. Do they indicate like an inflection point in terms of investment options like these becoming mainstream? Avishek and Ekmeet, I think both of you all deal with lending platforms. So I think you all would probably be best to sort of answer these questions.
Can I start, Avishek? Maybe you can add on later. So
Sure.
What Cred and BharatPe have done is laid down a great framework for what we call as a big revolution that is in front of us. What they have done is created an intranet amongst the users of Cred, and they've created this ecosystem wherein the trust comes from Cred, and the entire operations, backend operations, are taken care by the P2P lending platform. So essentially, what we are seeing here is what Cred and BharatPe have done. I mean, we are looking at similar disruptions to happen across any marketplace. These are payment companies, so they're already a lot of people are trusting them with their payments, with their capital, with money, and so they've added another layer of investments on top of that. But when you look at the framework that is set out, I mean, the framework is set out for any marketplace here. I mean, we're talking about, let's suppose we talk about Amazon. Amazon has millions of merchants on the platform. There is a trust that all the merchants have on Amazon. And they say that in a marketplace, in a sizable marketplace, there are merchants who have excess capital with them, and there are certain merchants who would require capital. Obviously, the size of the one who require capital, smaller merchants will be more. But at the end of the day, what Amazon could be doing is creating an intranet amongst its own merchant network, that the larger distributors, the larger merchants having surplus capital can invest that money into the smaller merchants that are available on the Amazon's platform. And that's what we're talking about in the online world. And we're talking about the same concepts in all offline marketplaces. Sudarshan mentioned about his family. I mean, they're also essentially kind of doing something similar. Marwadis are the best example. Gujaratis are the best example, which lend and borrow amongst themselves. These are smaller communities that are built out who will lend and borrow amongst themselves. So what we see, what Credit and BharatPe have done is set out a framework on which platform like us, like Nikhil's platform, are going to build upon, and we're going to distribute it to nth level. Avishek can add particularly on this.
Absolutely, thanks, Ekmeet. What Sudarshan mentioned in one of the initial questions is we're probably standing at where mutual fund was 30 years ago, 25 years ago. So we are again there. When it comes to, if we are talking of an inflection point and alternate becoming the absolute hardcore investment platform, that is it's not yet the time, probably.
Okay. It's too early.
Yeah. So, but having said that, there is a tremendous growing market for this kind of disruption, this kind of discovery of new asset classes, discovery of new platforms, discovery of new technology, making things much easier for people, making things easier for investment, the entire journey, the entire experience. And this definitely with time is going to go to the next level, and it will not stop. It'll move.
Got it. So I think my next question is inspired by Spider-Man. With great power comes great responsibility. And something that entrepreneurs don't necessarily like dealing with, I guess, regulators. Regulation is key though, isn't it? Especially in financial markets. So in your view, how is the regulator thinking about this? Which direction is the wind blowing, and what could be an enabler? So I'd like to get Nikhil's view on this, and then Sudarshan's, because you've dealt with law quite a bit. So I guess both of you.
Sure. Sudarshan, maybe I can go first. I think regulation is incredibly important, right, for this sector to really become mainstream.
Yeah.
And a lot of the questions that I'm seeing on the chat box are really about trust.
Yes.
No one questions. No one has the same question about a small case or a grow or a Zerodha, because their products are ultimately very regulated, right? And that's the way it should be.
Yes.
Unfortunately, in a lot of spaces and a lot of times, regulation will follow rather than lead, because there will be innovation that regulation will then come to make sure that the right guardrails. In my view, there seems to be a lot of action that seems to suggest that the RBI and SEBI are definitely for promoting access to such new investment options among a larger base of users. There have been certain steps, including modifications to the P2P policy, which have allowed larger investment sizes, different kinds of investments. We've heard about growing acceptance for crypto, even from a regulatory perspective. The government has made certain changes in terms of the ticket size for public offerings, which have reduced the minimum lot size that you can invest in. Most importantly, markets outside India, US, Europe, Western markets, have seen this regulation come in place to the extent that someone can really fractionalize and democratize investments across the spectrum. And there's a SEBI paper dating back to 2014, which talks about how this could be brought into India with the right structure or the right framework in place. So a lot of the signs are right. Regulation does take time, and it should take time because it impacts a lot of people. But if I was to say which, to answer your question, the direction of the wind, it's definitely for regulation to come in as an enabler rather than as a disabler to this industry.
Right.
Yeah, I'll just add on my points. I mean, rightly said with Nikhil, right? I think the direction is in the right angle in multiple ways. I can speak more from RBI and SEBI as two regulators as an example. Like RBI had its Innovation Sandbox program through which video KYC, which is now a phenomenon, something which RBI took it back then and said, yeah, this is something new, let's take it up. P2P lending is also one classic example for that matter, right? How they've grown from a small ticket size to now, I think 50 lakhs is the limit one can invest, etc. also at the same time. So, but then one thing is there's a growing trend for financialization of all types of securities, right? Like nobody earlier thought, hey, Strata aisa kuch karega, Grip to do something like this, your regulator, and let's start creating laws around it, right? So, always startups are way ahead of regulation, and regulation always plays catch up, right? That's how it is. Like whether it's online pharma or what Dream11 is doing, etc. Right? Then no laws are still creating, like in spite. Last week, GST laws around Zomato and Swiggy food delivery also came in. So proactively, regulators, unfortunately in India are more reactive rather than proactive. And if they could be only not in Bombay, but be in cities like Gurgaon and Bangalore today, sit with the ecosystem, create products around it, or at least understand what is the need of the hour, etc., and look at the larger picture, I think a lot of things can change. But I think regulators work only with players to make sure the interests of the investors are taken care of. That's prima facie, and I can speak because as a part of one of the policy making with the government of India when I was practicing law, and they went to all the incumbents and to who are existing. Okay, now you tell me what you want and how can this industry grow, but at the same time I want to protect everyone's interest, right? So regulators would work with you, take feedback from you, because at the end of the day they want the ecosystem to grow rather than it cut down completely, unless it's something which is against the interest of the larger audience in itself, right? So regulators are great. Nikhil brought out a very important point earlier, that why it is important for regulation is one bad apple can spoil the entire industry. And with whatever we are trying to do in a good way, institutionally with proper corporate governance, one thing can spoil it out in a larger way, and the entire industry itself can take for a toss out.
True. Right. So I think my next question, I'd like to get everyone's opinion on this. Can you share like one metric that really reflects your level of interest on your platform, and why you're so excited about building in this space? So I'm going to start with anyone. Sudarshan, go first.
Let me begin, and I think Nikhil should be the right guy to answer this question. But one thing which we've been selling for a little over 1.5 years now, and we've done close to about 470 crores from an AUM standpoint on our platform right now. I mean, we're very proud of what we've done, but definitely a lot more room because it's real estate. It's a different asset class for people in itself. What we love is a 30% repeat investor base, right? So people start small. They start with 25 lakhs because that's a minimum, unfortunately. And they go 1 crore, 2 crores to a point where a guy who started with 25 lakhs has now invested even 5 crores with us, right? So that cost is important. I think why I said Nikhil, because Nikhil's repeat investor base is just off the roof. Likewise, I'm sure with Avishek, at least I know because I'm an investor with Avishek's platform proactively. So repeat, I've invested over 3 years. I don't know how many investors I've referred to him as well. But this is what is very important, right? So the repeat investor base, the love which investors show to us with their trust, I think is the biggest user metric, at least from our platform. And I'm sure for all the platforms at the end of the day. I mean, it's that source of motivation to get up and, win the world for these people.
Yeah, absolutely. Avishek, what about you?
Absolutely, bang on. Sudarshan, thanks for that. Yes, it is.
I don't think anyone can deny this, I guess.
It is obviously the repeat clients coming to us. And one most important thing is the feedback they carry and they give to us.
Right.
So with every transaction, or probably every 2 quarters, every 3 quarters, the kind of feedback they come up with, which adds massive value to our development, to the development of the platform, to probably introducing new features, to adding new products, anything. So those repeat and feedback.
Got it. Nikhil, what about you?
I'm going to cheat on the metric. So I'm going to give the repeat metric, but I'm going to throw in another one that we're really proud of and we track quite closely. On the repeat side, very proud that we have a 43% repeat. I think what excites us more is that 12% of our users are on their 5th investment within.
That's amazing.
Within the first 100 days. So I think that to us is something we're very excited about. The other one, which is referral actually, because as we discussed earlier, that's a key way to acquire, especially in something that requires education, is completely new. And 25% of our users have referred someone else through our official referral tool. We don't know what the unofficial number is, but through the official tool. I think those to us both symbolize a high degree of engagement and appreciation for the kind of products available, and very, very focused on making sure that we push those numbers higher by delivering better experience.
Wow, that's great.
Which is why I told you, Nikhil is the right guy, because he's the one killing.
He's killing it on this metric.
You're the last one left.
I think referrals, definitely repeat transaction referrals are the key metrics to look for almost everyone here. One very interesting thing that we track in addition to this is the amount of value that we generate for our investors and the wealth that we generate for our investors. I think that's also something that keeps us very, very excited and pepped up every day, that we are generating so much wealth at a cumulative level for our investors, that obviously topped up with the referrals. Nikhil has also summed up similar kind of numbers. I would say Sudarshan has larger ticket size, so that is why the repeat transactions might be different. But Nikhil and us kind of are in a very similar kind of ticket size. We also have a very, very huge repeat user. On an average, every investor does around 6 to 7 top-ups in terms of the amount of capital that invests on the platform. We've still got users who are still investing with us, and it's been about 6 years also. That a lot of investors are still with us, still investing, still asking for more opportunities to invest. But yes, in addition to this, wealth generated is something that is very, very exciting. I mean, we track that on a month-on-month basis. We feel this is very, very important, that we are in the business of increasing value for our investors. How much are we contributing to that month-on-month is also very, very critical for us.
On that note, we're going to start taking some questions from these alleged investors. Taking it directly from the chat.
Yeah. So I'll take one from Sambit, who has a question for Sudarshan. What are the pros and cons of co-investing in real estate co-ownership, renting in India from an investor's point of view? Also, since geo boundaries are immaterial these days, how does the Indian scenario compare with similar real estate investing platforms elsewhere from risk and return point of view for an investor?
Oh, well, honestly, a great question, right? I mean, the risk and pros, the pros and cons, which you just mentioned, it's not just whether you're investing through me, buying real estate, or you're buying, an asset-backed security through GRIP, or an invoice discounting, or a P2P, right? I mean, end of the day, everything remains the risk to reward ratio for that matter. Today, we are generating about 8-9% in terms of rental return, grade A, pre-leased assets, etc. put together, right? But what all of us are doing is not something new, right? Like, let me speak from a real estate standpoint. Back in the days, you find an opportunity, you don't have all the money to invest. What do? You go talk to your brothers, you talk to your friends, talk to your, whoever is your trusted friends, and you talk to them, why don't we invest together? Now, 2-3 things can happen at that time. One, they might not see the same vision you're seeing in that particular opportunity, or they might not have the liquidity. And the third, which I think is a bigger element, they don't trust you. Right. So what platforms like ours are solving for at the end of the day is getting a like-minded platform which finds like-minded investors where all the rules and regulations governs your interest proactively as much as their interest is taken care of. Because at the end of the day, both of you are same in our eyes, or anything for that matter. Whether you put 25 lakhs or you put 5 crores, my investor interest or my responsibility is the same at the end of the day, right? So this is something which is very important. Yes, what platforms like ours have changed the entire story. Apart from that, like I can speak from a real estate. Real estate has always been a very local business. I'm from Bombay, invest in Bombay. I'm from Bangalore, invest in Bangalore. But I know, say Hyderabad is a great growth story, right? But how do I find opportunities? How do I go? Like for instance, I didn't even know that what Grip is doing something like this exists, right? That I could buy something like this and I can generate returns, because these are great platform and a great product and a great return in itself, right? Like, so what are we doing is not just changing the whole geo boundaries, but bringing accessibility to investors. Like we have investors from Rwanda today, right? We have investors from Tirpur. We have investors from Satna, right? I didn't even know where Satna was before. I'll be very honest, right? But
I was about to ask.
but point remains that the entire geology is changing, where people can invest beyond, get access to opportunities. And I mentioned earlier, right? Like 25 years back, where the advent happened, from personal equity exposure and mutual funds came to professional managers managing everything, is what we are doing. Whether it's co-investing in any kind of an asset class, end of the day, where you could do directly, you're having a professional manager doing it. So the same story again, guys. What mutual funds is nothing but co-investment at the end of the day, where you're co-investing in a mutual fund and a fund manager is managing on your behalf. What platforms like all four of us are eventually doing, just that from personal exposure, you're coming to a professional manager who will manage.
Doing that more transparently, I would say.
Yeah, at the end of the day.
True. I'm going to take one question from Raminder. He says there's an element of a lock-in in most of the new age investments. In the event an investor wishes to exit due to an emergency, are you working on this aspect? Anyone?
Let me go first, because probably Sudarshan and Grip product is more locked in than Avishek and Ekmeet. I think liquidity is a very, very important factor of any investment. And the nature of the investments that Grip and Startup facilitated are slightly more difficult to get liquidity for. I don't know the answer for Sudarshan, but I'm assuming that he would like to solve it as much as we would like to solve it. And we're trying to find the right mechanisms to do it. Just as an example, can we create a private exchange for fractional units of a asset owned, right? It comes down to really having the right number of investors and the right liquidity where trading can happen. If you've bought a vehicle at Grip, you bought 5% of a stake of a vehicle at Grip, can you sell it to someone else who wants to come in and replace your position? So I think that's the direction in which we are thinking about it. It's easier said than done, but yes, solving for liquidity is very, very important as a factor for us.
I mean, I'll just add one point, very rightly said by Nikhil. Unfortunately, this is an illiquid asset class in itself, right? And these are long-term investments for people. So, but unlike the whole traditional model, if somebody owned a 50 crore asset himself versus us, where he's probably putting 50 lakhs, getting an investor for 50 lakhs is comparatively easier than getting an investor for 50 crores, right? But we are working on multiple ways through which liquidity could be created. We've exited multiple people in the last 1 year because of pandemic or any other financial emergency where they needed money. And it's a whole lot of exchange. What Nikhil mentioned, 5% of this is fantastic. I think Avishek is the right guy, because in spite of them being a short-term product, they have created another product where you can create liquidity. Right? I was very fascinated with what they have. Avishek, you should put some light.
Yeah. Thanks, Sudarshan. So ours is a product which ranges from 30 days to 90 days, but there had been a lot of requests from investors suggesting that what if I urgently need that money back? What is the way out? I cannot hold. I don't have that option to hold it for 3 months. So we kind of created a resell where the first owner can come onto the platform and opt to sell his or her units to somebody else, whoever chooses to buy it, at the same rate whatever days are left, the future buyer will get interest for those many days which are left. So we struggled for a good number of years to kind of come up with this product. Obviously, the legalities, the structure around it, how to push it on the platform. It's not an easy task, of course, to design. Finally, we could design it and we could actually roll it out. And I'm sure that is helping a lot of people who are in real need of money urgently.
Right, got it.
Absolutely. So the next question is from Rahul.
Yeah, we have since we are running a little short on time, I don't want to keep you guys as panelists as well. Your time is money for us, clearly.
We'll take 2 or 3 questions.
Yeah, we'll take 2, 3 really fun questions which we really want to take, and then we'll try to wrap this up soon. So the first one is from Rahul Malik.
And he asks, how do you reach new investors? I came across all of your platforms online by chance at different times. I would prefer a systematic method. So how is it that you guys reach new investors?
I think all of us probably use the same tools today, and it's predominantly Google, Facebook, working with influencers such as yourselves, and as well as doing more stuff from an education perspective, helping getting investors to refer other investors. I think that's a very large channel for us. I do think that over a period of time, there will be more organized distribution through other broader wealth platform and wealth advisors. I think it's not far away that a Kotak Wealth or an ICICI Wealth or a Motilal will start adding some of these products to their platforms to offer their investors, not just the HNIs, but even a broader segment. It will become more mainstream. I do believe we're heading to that point of time. We've had some of these conversations. Kotak is an investor in Strata, and maybe Sudarshan can throw more light on that. But I think that's definitely where that structured approach will come. Till that point of time, the acquisition of investors will largely remain online.
Got it. One very fun question which I am very interested in. I think I want to know this. Have you guys invested in each other's products?
I'll go first. I have invested in both of KredX and Lendbox. I don't have 25 lakhs. One of the very frequent requests we get is to do a grip fractional transaction for a starter deal. So that's
wow, that is interesting.
And well, that's something hopefully sometime down the road. But yes, that's the only one I haven't invested in.
Wow,
interesting.
Very, very interesting.
Well, I've been investing with Avishek's platform for I think over 4 years now, 4-5 years.
Wow.
Pretty much, he was one of those very early investors on our platform.
Early investors.
I think I've bought over 60 deals from his platform already, right? So I'm an insanely high repeat investor for Avishek.
This is the one you're talking about when you talk about your metric, this guy.
I mean, like what point which is anyone, how do you do? I think one thing which I at least had, and I bounced it off to Nikhil once, that all of us are perhaps chasing the same investor base, but we're not chasing the same part of the wallet share. Right? And if there is an overlap of 25%, it's still worth it, right? It doesn't matter whether doing roadshows or whatever it is. I think and what Grip is doing is a fantastic IP which they've created with Finfluence, right? I mean, they've done it at 100. I believe they'll do larger ones at 1,000, 5,000, 10,000 as they move forward in terms of their AUM. But point is this, that a platform like this, an alternative, or rather I would say an association for alternative digital wealth management platforms in itself can be a great idea where all of us could work together. Focus of that should be more education rather than salesy, because educate investors, and if they like it, they come in, right? The approach should be that, let them be aware and then let them take a call. But something which Nikhil and I have ideated a couple of times, soon maybe we should have it.
Yeah, absolutely. There's your cue there. Last question, guys. Whoever thinks their question has not been answered, don't worry. I've been told that all the unanswered questions will be responded to after the session, along with the video link. So don't worry, you'll be able to access it. Last but not the least, what your best advice be for somebody in their 20s? We get this question a lot as influencers too, so I just wanted to throw it out there.
I'll just say one word: start.
I love that.
Nice.
I'm going to quote you on that. I'm going to quote you on that. That's brilliant.
Don't do anything, just start.
Anybody else?
Ideal
No
time,
advice for anybody in their 20s. What is this?
ideal time to start building the discipline, just to add on to Sudarshan.
Yes, absolutely true.
Ideal time.
And people in their 20s are going to be like, discipline, wo kya hota hai? What do you mean?
Tiny bit of discipline.
Tiny bit.
No, I think that captured it really well. If you've started whatever, right? And I think the question was, I saw this question and it was nothing to do with finance. I think starting and experimenting is the reason we're all on this call. And we got to where we are, right? So I think if there was a life lesson, probably it's probably to start and to keep experimenting.
Absolutely. Well said. Ekmeet, any last words for somebody in the 20s?
I think they've covered up almost everything.
Okay, great. So I think that brings us to the end of this fantastic panel discussion. I am very glad that we did this. I'm so excited. I did learn a lot. I would have loved to keep going, but pressed for time, what to do. So thank you so much, everybody who's joined in, and thank you so much to our panelists. It was lovely speaking with all of you. We've learned a lot today, including
everything.
Everything.
Investor awareness, to diversification, to accessibility, to
everything, really.
Everything.
And start. I am going to quote you on that. That was brilliant. So I think it's made us interested in new age investing.
Yeah, and we'll definitely be keen to create like a lot more awareness and content through our little sort of channel on these new age investments. Lastly, I'd really like to thank Grip Invest for having us, and we wish them good luck on their mission to change the way Indians are thinking about investing and facilitating wealth creating opportunities.
And all of you beautiful panelists who have
taken time out.
Yes, thank you so much. And hopefully we'll also be one of your repeat investors very soon.
Great. I would just like to conclude, Nikhil, before you say, I mean, firstly, I was super thrilled when Nikhil was obviously invited, but when he told the reason for it, hitting 100 crore mark is a momentous thing. And, I mean, I would say our asset class is easy because it's real estate, right? Real estate India ko bechne ki zarurat nahi. People understand. But what Nikhil has done is sheer disruption. It is something which it's unheard of. I would say it's a road never traveled rather than less traveled in itself. And getting to 100 crores in a year's time is nothing short of momentous thing, right? So really, hats off to them, to Vivek and Nikhil, both of you. I know the amount of hard work these guys have put in to reach where they are, and the amount of running around they've done to build what enterprise Grip is. So I'm more than honored. I would say I'm just so excited with the way you guys have grown, and I definitely see how much more they can grow. Thank you, Nikhil. Thanks for having me.
That was very kind of you, and I'm sure it means a lot to the team that's on this call listening to this webinar. So thank you so much for saying that. From my side, just thank you for making this happen. The funny thing is, we all compete, but at the same time, there's so much to be done. The pie has to be made so much bigger, and I'm sitting in the session thinking about how I should call all of you after this and what we should do next. I think there are lots of things to do as an association, as an industry that can help us all grow. I think this is maybe a great opportunity to start. Thank you for really taking out time for hosting this wonderful session and for making this happen, to the FinCocktails team, and to Sudarshan, Avishek, and Ekmeet for joining us. Thank you. Big thank you to all of our users, not just for attending, but for investing on our platforms. That means a lot to all of us and gives us an opportunity to keep growing.
Of course. Thank you, everyone, again for joining in. Make sure everyone, you join in tomorrow at 5 p.m. for another panel discussion about new age investments through an advisor's lens. It will be hosted by Fenil Gandhi from Grip. And be excited for that. Join in. And this is FinCocktail signing off. Thank you so much.